Okay, we made it. Little technical difficulties with 3 minutes, but a lot less issues than what's going on in Los Angeles. So I just want to start off and say, imagine losing your home to the largest fire disaster in Los Angeles history, only to find out your insurance won't cover the cost to rebuild. This isn't just a crisis for the 12,000 structures reduced to ash. It's a wake-up call for every homeowner in America. And today we uncover the hidden truths about how this $150 billion catastrophe will change the game for insurance rates, home prices, and your financial future. And then you're in the impact zone. What do you do to make sure you're getting the right amount of claim insurance money back that you deserve? So I want to start off with an introduction. Today we have James White. He's a partner with Green and White LLP. His firm helps homeowners manage their property insurance claims and maximize their recovery. Welcome.
Happy to be here, Ed. Thank you so much for having us.
I can't imagine that you ever would imagine that you would have so many people need your help right now.
You know what? It's just sort of the unfortunate nature of our business is that we meet people sometimes in their most critical times of need. And right now with 14,000 structures burned, a lot of people have insurance issues.
Yeah, I can't imagine. Also with us today, Keith Brewer, co-founder of B2 Insurance. We're located in Redondo Beach. Is that right?
That's right.
And so you're an insurance broker representing many different insurance companies.
Yes. And specializing in home, auto, multifamily units.
Good. Well, we hope to get some insight of what we think the future of this insurance world is going to be. I'm sure it's going to change a little bit.
Yes, I think so.
And Justin on the screen with us today as well, regional director for EXP, and really wealth of knowledge in the real estate world, and happy to have you here. I imagine you're getting a lot of inquiries about what the heck's going to happen for people in this real estate world. Is that right?
It is. Thank you for having me today, Ed. It's, EXP specifically, we have over 10,000 agents in California, and this is both an issue directly for those impacted by the fires and in the immediate vicinity, but every day we're getting questions about how this is going to affect insurance throughout the state from all of our agents. So I'm actually really excited for the information we're going to get, both for our local escrows listings that have been impacted and families that we're helping have been impacted, but how we can address this going forward with our agents that are answering questions from their clients every day.
Well, good. And I think in the audience today, we're going to have, those that were individually or personally impacted what happened in Los Angeles with the fire situation, as well as others from around the country that are concerned about what's going to happen with the insurance, and also just ways to protect yourself now and in the future related to all those things. So thanks for everyone's jumping in. I do have a comment section open, so if you do have questions, give it a try and post in the comment section below, and we'll try to get to some of the questions that might be out there. But I wrote down a list of a lot of great questions that I think we'd start with. So the first is, right now, the people that have been impacted, right? What would you say are steps that the homeowner should take right now to make sure that they are going to get the most from their claim that they have to place?
One of the most important things that you can do is request a copy of your policy.
Okay.
See, a lot of homeowners have what's called a declarations page. You get that anytime you do a renewal. And so it'll come in the mail and it'll say what your coverages are, but it's a couple pages. Your policy is actually often a 50, 60 page document. And there are all of these rights and duties and exclusions. And before you start negotiating with your insurance company, you want to know exactly what you're covered for and how those coverages work.
So that makes a lot of sense. And my thought goes to concern. Like, okay, the fire happened, you lost everything, and it's too late to change your policy. But is there from your company? So at Green and White, I'm so glad we met you last year when we started talking. But I know you go in and try to help people understand insurance policies. And it was funny, I was watching a movie last night, and I can't remember which one it was, but it was all about, it was Landman. So it was Landman. And it's about an insurance company who sends out lawyers to make sure they protect the insurance company from not paying out too much on the claim. Our insurance companies really designed that way to not overpay. And then you come in and on the opposite side to help the customer, consumer that have been impacted to protect them. And is there really that battle? And is there gray lines where you can move them, or is it black and white?
So to start off, I don't think that the insurance companies are inherently bad or trying to do the wrong thing. I mean, the business of insurance is basically collect more in premiums than you have to pay out in claims. The way to do that is to understand what your risk is on one side, and then to be really cautious about what you're paying out on the other side.
Right.
And that means that the insurance company has to look line by line through your policy and compare that to what was actually lost. And they're not going to try to just give you everything off the bat. And that doesn't mean they're trying to do something wrong, but it does mean they need to understand your coverage. And that's hard for both the homeowner and for the insurance adjuster. Because think about it, these adjusters, they're dealing with, 20, 30, 40 claims themselves. And the adjuster may not be familiar with all of the language in your policy. They might not be familiar with all the special rules that apply in a state of emergency. And in those situations, there really is quite a bit of gray area. There are a number of terms in policies that are sort of up for debate that require some interpretation. And I think it's important that homeowners have a good understanding of what they're actually covered for in the same way that your adjuster might. In a situation, people like us can come in and help you understand exactly what is covered.
Can you go into an example of one line item that is gray? And an insurance company may say, here's $1 million. And you look at it and say, they deserve $2 million, whatever those numbers are. But what is that? What's one of the biggest line items in an insurance policy where that gray exists?
One of the biggest line items in an insurance policy is going to be your coverage for personal property, for example. You have personal property coverage that is your furniture, your electronics, your appliances, anything in a house that is not part of the actual structure itself. And first of all, there's going to be a dispute about whether or not something is a total loss and needs to be replaced, or whether it is damaged and can be repaired. And the truth is, the insurance adjuster doesn't actually know the answer to that. We often have to bring in an expert to help us determine whether or not, let's say that you've got a TV and it was exposed to substantial smoke damage. You might not know whether that TV is actually going to work in the future if it's been exposed to smoke. That happens with a lot of different things in a house. And so in the personal property realm, there are things that are a total loss and there are things that can be repaired. And finding out exactly where that line is not always true. It's not always easy to do.
All right, so I can understand that part, but I've talked to so many families right now, mostly from the Palisades, that lost everything. I mean, they mean everything. And I know as an insurance broker, you always advise us, take a picture of everything, right? And we always procrastinate, never get to it. But I'll go to that first. Let's say you have not been impacted yet. What is your recommendation for a homeowner to do in the event this happens to truly identify the value that exists in their home? What is the best way to do that without a massive inventory,
The best way, I think adjusters are accepting this, is take your cell phone and take a video of everything in your house, all your clothing in your closets.
So I was walking through my closet yesterday and I was thinking, okay, I have a number of suits. Now, if I just take a picture of the suits, it's one thing. But how do you know that whether it's a Brioni $5,000 suit or the Target special for $49, do you have to open the label of every suit? I mean, what do you have to do? How far do you have to go?
Probably be a question for you. I mean, I don't think you have to. I think as long as the adjuster can see what you have in your closet, I don't know, are they taking your word for it or?
Yeah, so I would say in a typical scenario, we're talking about, let's say you haven't been impacted yet. Keith's absolutely right. You do want to try to document everything that's in your house. And so that means taking a video, looking at your suits. If you're someone who's just lost everything in a fire, though, you're not actually going to have that video most likely, and you probably won't have opened up, the suit jacket to see exactly what brand it is. There's a special insurance rule that applies in a state of emergency where the insurance companies can't require you to use specific forms for all of your contents inside a house. And they're also supposed to allow you to group things. So if you have a bunch of suits and you have, let's say that you have 10 suits and 7 of them are Brioni and 3 of them are the Target Special. If you know that, be honest about what you have. If you don't know exactly what you have, you can be able to categorize things in suits and say, yeah, my suits typically cost this much. Realistically, there's probably going to be some debate between you and the insurance company about how much everything was worth. But if you're acting in good faith and you're honest about it, I think that you're going to be able to recover the value of what you really had, even in groups, and even if you don't know exactly what every single item was.
Hey, James, could I ask a question on that? And I heard this one time, personal property in a home is broken apart into different categories, right? So in some instances, you have, let's say, clothing, right? You have electronics. Is that all covered under one deductible generally for somebody, or is it separate individual deductibles for each thing? I know this from just a personal experience I had with a friend that had a break-in, and it was pretty eye-opening for how their insurance worked for personal property going through it.
Yeah, it's a great question. In a lot of policies, it's just going to be one deductible. That's a policy by policy thing. So I can't give, a blanket answer to everyone out there who has a policy, but typically it'll be one deductible.
Okay.
Also, just to that point, there are limitations on certain items in your house, coins, jewelry, china. So not everything's covered to full limits. And so that's why it's so good to research your policy with your agent or.
So give us a list of those items that we should be concerned with that aren't covered. We may have to get a rider for it, I assume. And so you said coins and jewelry.
Yeah.
What about someone that
Computers.
overspends on purses and shoes?
Those are covered up to your limits on personal
Covered up
property.
to limits. So let's say you spent, I don't know, $100,000 on jewelry. That I assume that's over the probably allowable expense. So how do you insure things that aren't there if you want to protect yourself for the future?
Yeah, so you're supposed to get an appraisal, and insurance carriers really won't. If it's something's more than $5,000, then you have to have an appraisal.
Okay.
And an appraisal within the last 30 days. It can't be 2 years old. So yeah, that's what you got to do is get an appraisal for all your jewelry, watches.
And it's important to note that in a lot of these policies, you're going to have your regular personal property limit. And then as Keith mentioned, other sub-limits for different categories of items. That's not true in every policy. Some will be less specific about what personal property, and some will be very specific. For example, we see all the time art. A lot of people have very expensive art collections. And in those cases, you do want to have those things appraised. Let's say that you haven't had it appraised. There's going to be a way to work this out, but you need to understand your coverage. If you have some sub-limit for it, then you're not going to be able to go over and above that sub-limit. And to figure out what these things are actually worth, that might require getting a curator or a professional art restorer, because a lot of these things, a canvas painting that's been covered in smoke or completely destroyed is going to be pretty hard to value, especially if it's one of a kind.
Knowing that.
Yeah, go ahead, Justin.
No, please go ahead.
No.
Okay. Knowing that, so for people that have these right now, right, in the sense that maybe they haven't contacted their insurer yet, or they haven't, they're just in the starting phases, what's something that we should advise not to do? Like, what's one thing that people that have, especially large collections of art, a lot of jewelry, whatever the case may be, and they're starting to contact their insurer, what should they make sure they're not doing to protect themselves? Is there any words of advice for something that could get them in hot water or get a claim denied?
One of the most important things to do early on as a claim is to recognize your own limitations. And that is your own, policy understanding that might not be complete. So if you don't know exactly what's in your house or exactly how much it costs to replace or repair something, don't try to make too close of an estimate and risk being under it. It's a lot harder to walk back statements that you've already made. And it's a lot harder to walk things back you've already told the insurance company it is than it is to say, you know what, I don't know the answer to that right now. And if that's true, that's important because you can always supplement and provide more information when you have it. But you don't want to be in a situation where, for whatever reason, you've said the wrong thing or you've underestimated something.
You mentioned the other day when we met that when the insurance, I don't know, it's an adjuster that calls or whoever's working with you during your claim, that they're recording the call and you do have to be careful what you say. So is it much like a deposition where you've got to be spot on with your answers and you can screw up what's going to get back to you based on your answers? And more importantly, what could you say wrong? Even if you're remaining honest, what could you say wrong that would affect your insurance claim?
So you bring up a good point, recorded calls. Typically in a big insurance claim, you're going to have a recorded statement, which is most often a phone call where the adjuster will call you and ask questions and it's recorded. There's also an examination under oath that may happen depending on disputes in the claim. In either scenario, what you're saying is being recorded and being documented. The adjuster is going to ask you a lot of questions. And the questions that they ask you, they're going to sound really friendly. And I don't think the adjuster means to be bad or nefarious or anything like that. They're doing their job.
They're strategic.
They're strategic, though, and they're going to ask you questions that are designed to determine whether or not something should be covered. And there are a lot of things that you might say that might walk you out of coverage. And I'll give you an example that's not specifically fire related. It's just one of the most common that we've seen.
Okay.
So a lot of policies will talk about mold, and they're going to have some sublimit for mold. So you might have $1 million coverage for your dwelling, which is your house. But let's say that you've had water damage, and you might have in that policy a $10,000 limit for mold. A lot of homeowners might have a big leak and then see that they're concerned about mold on the inside of some drywall, and they're going to start talking about that. When they do, the insurance company very often will say, oh, well, fine, we'll give you your $10,000 sublimit, because they're categorizing that as a mold loss. Now, in my opinion, it's a case-by-case basis, but oftentimes it's actually a water loss. It's not a mold loss because the drywall, the insulation, everything else was damaged because of the water. Mold is just an ancillary effect that comes later. But if you're not careful and you talk about all of your damage due to mold, you might walk yourself out of the $1 million coverage and into the 10,000.
Wow.
Even though you should have been under the policy covered for the $1 million. And if you do that, it's much harder to get out of the hole.
It's a $990,000 mistake.
And it happens a lot. And it's unfortunate. And the adjuster was asking questions that they're trained to ask, not because they're bad, but just because they're trying to do their job. And the insurance business requires paying out less in claims than you take in premiums.
Interesting.
But that's another thing that you brought up too about mold, and that it's usually takes weeks to grow afterwards. So it's important, if you do see any kind of leak, report it as soon as possible, or try to stop it as soon as possible, because most insurance companies have a clause that it has to be a 7 leak for coverage to kick in.
So what's the $1 million mistake from either one of you right now that these fire victims could make when talking to insurance companies?
I'll tell you one thing that I saw on the news the other day that was just, heartbreaking. I don't know how the coverage is going to go, but it scared me. A home was damaged substantially due to fire.
Fire and smoke.
But fire and smoke. The home, it was not completely burned. It was damaged substantially due to fire and smoke. And then a landslide knocked it down. Fire and smoke, that is covered by your insurance policy for pretty much everyone. Again, case-by-case basis, but most people are going to have coverage for that. But landslide, insurance policies call that earth movement. And damage due to earth movement, that's not covered under most policies. There are exceptions to every rule. But in that situation, I'm nervous that the homeowner there might face a lot of issues when they're negotiating with their carrier, because even though the home was damaged from fire and smoke in one sense, the knock-on damage from a landslide coming after, I wouldn't be surprised to see the insurance company try to reduce their exposure there by saying, no, actually that damage was part of the landslide. So what do you do in that situation? While I say you want to be careful with what you say to your adjuster, it is important to document your losses early and often, and to file a claim when you know that claim has happened, to avoid something like this worst case scenario, mudslide or landslide happening, that might walk you back out of coverage.
Wow.
So does that make it important for timing? Right, when you think about it, because this is going to be an issue. We haven't had any rains yet this year, but we're certainly going to it at some point. We're assuming we do. is getting to your carrier and making sure they know of the damage of fire and smoke before another potential landslide helpful? Because that way
It absolutely is.
we're there.
Yeah, it's important to do it. I mean, you don't have to tell them the day of. If you're trying to relocate your family and get somewhere safe, then do that first. That is more important than dealing with the insurance. But you do have a duty under your policy to notify them promptly. And if there's any risk of some subsequent damage that may not be covered under your policy, it is probably in your best interest to at least get a claim in and have it specified as here, a fire claim early on. Get whatever evidence you can so that even if something bad happens later on, you can say, no, it was the fire damage that we're talking about here.
Good advice. So here's a lot of conversation happening with underinsured people. And I have two parts to that question for both of you. One, how can you help them? And we'll start with that. And I want to move to you. And how should an insurance broker advise people along the way to make sure they have the right coverage? Because I can tell you, I'm in the real estate business and sell homes every day. And it's been a light conversation around insurance and making sure they're fully insured. And we're assuming insurance brokers are having that right conversation. Yet, as we discover these claims being made in the Palisades and other parts of Los Angeles, they're finding out some big concerns. They don't have enough insurance to rebuild their home. The insurance company dropped them on December 28th, I heard. So that's another question. So let's say you file your claim, you discover you have a 5,000 square foot home. It's going to cost you $800 a square foot to build the house, or $4 million. You have a policy that says you get $2 million for a destroyed home. Can you help them get more, or are they just getting $2 million to rebuild a $4 million?
The first and most important thing to say is if you have a coverage limit, absent bad faith by the insurance company, you are going to be limited to whatever that coverage limit is from the insurance policy. That being said,
Wait. So bad faith, I don't want to miss it. So, because that's a big word, right? When is bad faith really been recognized from an insurance company? Not to stop you, but just paused me. Is it the insurance broker that did it in bad faith to sell a policy? Is it the insurance company just underinsured people on purpose? When does bad faith really come into play?
There's been a lot of litigation on this. Bad faith in the circumstance that I'm talking about is going to be where an adjuster hides something or manipulates a document, does something that all of us would recognize as wrong, right? It's obvious. For the broker, they don't, it's not so much your broker's responsibility to make sure that you are properly insured. Now, they could do something wrong. They could give you a policy you didn't ask for, something like that. But generally speaking, no, it's going to be more what the insurance company on the claims and adjusting side is doing that's going to have the biggest impact on bad faith. But I wouldn't count on that. If you have less than a certain amount in your policy, if you have $4 million to rebuild your home and only $2 million in coverage, you're going to be capped at $2 million. And it's important to think really carefully about what expenses that you want to incur to avoid going too far out of pocket. I do want to add, though, that you're going to have various coverage limits in your policy. Those coverage limits, those are real and they're true, but sometimes they're hard to understand. So you might have a limit that says dwelling coverage $2 million, but you might also have a little endorsement that says, well, if it's a total loss, we can increase that by 25%. You might also have something that says, in the case of a total loss, the fair cost to rebuild actually applies. So, and those are not things you're going to always see in your declarations page. That's why I say get your policy. They may appear in an endorsement, which is like a rider in other insurance contracts down at the bottom, just so you know what you're fully covered for. And it's one last thing on the point. In a state of emergency like we're in right now, you are allowed to combine for total losses your coverage A, which is the cost to rebuild your home, and coverage B, which is the cost to rebuild other structures like a detached garage. You can't do that normally, but right now you can. And I'm going to imagine a lot of insurance adjusters are not familiar with that rule. or may not encourage you to take advantage of it.
Okay, so you said a lot. And when I say a lot, that means the insured is going to have concerns whether they're reading their policy correctly or not. And so they need to go out and seek help. So this has been a question of mine for a long time. Can we trust our insurance agent to look out for us to get the biggest return? Our insurance agents, red flag if they have too many claims, and therefore you're careful what you do. And I don't mean to put you on the spot, but who do we go to trust? And obviously, at a law firm, I feel as an advocacy group, we can fully trust you, but there's maybe a cost to that. But outside of that, who do we trust to read the policy to make sure we're getting the right coverage? Can we go to our insurance agent who sold us the policy, and who's best to interpret that? Because there's a lot of things you talked about there in these contracts.
I think it's very important that everyone researches their home policy, check coverages. And one of the biggest things with replacement costs is that all the agents, we use a software. It's a replacement cost estimator. So it estimates kind of what your house would cost to rebuild. But a lot of those estimators are low, and it's not the true cost. It also depends where you live. As far as rebuilding in Manhattan Beach compared to Pasadena. Pasadena, I think, has lower construction costs, rebuild costs. That being said, we get a number, and as you pointed out, a lot of policies have 150% extended replacement cost or 25%. But you, as a homeowner, need to be insured to value. You don't want to use that extra 50% or 25%.
Okay, so I know you're speaking in percents and words that some of us may not get. So what did you just say with extended coverage? And I want to preface this with my life and history of real estate. So I started in the 80s. I immediately got involved with developers. And we were building homes here in Manhattan Beach for $50 a square foot. Now, these aren't terribly old homes. These were built in the 80s, even into the 90s. It wasn't that much more. So, but today, those same builders that are spec builders are spending $500 a square foot, 10 times what it was then. So if your 1980s home burnt down, you can't build it for $50 a square foot. You're going to spend $500 or $1,000 depending on who you are. But what happens if you've been in that home that long and your policy was based on a home that cost $50 brand new to square foot to build, and it's going to cost you $500 today? What is likely happening with those particular policies that old?
A lot of those people are underinsured, and everyone gets their deck page, their policy, they look at it for 2 seconds and they put it away, right? They're not really reviewing their coverage. We try to reach out to all of our clients on an annual basis. They email, phone, however we can. A lot of people are busy, but we try to reach out and let them know.
So what is the name or word or what we're supposed to do as insured to make sure that our policy keeps up with the true cost of reconstruction?
So that's kind of a great question, right? Like, we're not contractors. Like I said, we have our replacement cost estimator, but oftentimes those are low. So I think that the best thing to do is ask a contractor, ask your local contractor, what is the cost these days? Is it $800 a square foot, $500? I mean, our replacement cost estimators 10 years ago were coming out at $300 square foot, $400 square foot. But now I don't think you can build a home for under $500 square foot.
In the expensive areas, definitely not. It's a challenge. And I see people spending $1,300 and $1,400 a square foot. So we see custom homes being built at $1,300 a square foot. If you didn't tell your insurance company that, are they likely estimating it at $400, $500? Where are they putting it?
Yeah, the estimators have gotten better. We're seeing it like 6 or 7, but you're definitely not seeing $1,000 a square foot.
So if you just built a home and it cost you $1,300 a square foot to build because you built it on the Strand in Manhattan Beach and that's what it costs, can you just go to your insurance company and ask for that type of coverage and they'll give it to you?
Most of the times, sometimes some carriers will only go 30% above the replacement cost estimator, the software that spits out. So then you won't want to find another carrier like a Chubb, or Mercury's pretty good too. They allow you to go almost as high as you want, but there has to be some basis behind it, right? I mean, maybe you have to go have a contractor estimate what it would cost to rebuild and send in that documentation for you to get that number that you want. And then again, with that number, say your house is insured at $1 million, but you think it's 1.5 million to rebuild. There's also a cost with insurance on that extra $500,000 too. So you have to weigh that out as well.
Here's the $150 billion question. Those are the estimates of the losses that have been estimated so far that I've heard. I don't know how accurate those are, but $150 billion. I can't imagine who can or will write that check, and if it'll ever get written. It could devastate a lot of people that own these structures that they have lost. So I see two things happening: massive loss for a lot of individuals. Number two, the potential, and you tell me if this is true or not, of bankrupt insurance companies. Let's go there first. Insurance company can't pay the claims that they insure. They have to file bankruptcy. How are those insured protected?
So a lot of these companies have reinsurance to mitigate their losses.
Explain what that is.
So you have Mercury or State Farm, who's your primary carrier. Then you'll have a Lloyd's of London or someone as a reinsurer that has extra insurance on top. So bankrupted insurance company, could it happen? Maybe, but to be an A-rated carrier, which we only deal with A-rated carriers, you have to be very financially sound, and it takes a lot of money in the bank to have an A-rated.
Should anybody be concerned right now in Los Angeles that their insurance company could go bankrupt? What do you think?
Right now, I don't think that your insurance company going bankrupt is going to be the biggest issue. It's true you hear about State Farm pulling out of California because they're not making money here. That's true, but State Farm is nationwide. They're much bigger than this. So they are not bankrupt as a whole. And Keith's absolutely right. They're reinsured. So even if they start facing solvency issues, they have their own insurance to step in. I think for the individual policyholders, no concern about the insurance company going bankrupt isn't a big issue in terms of your claim value, but I'm sure Keith knows a lot more about this than I do. The time to think about this is that as the cost of insurance, meaning how much they're paying out in claims, goes up exponentially, $150 billion, what impact is that going to have on rates going forward?
So will the nation be impacted on rates based on this year and last year's tragedies? I mean, we had we had hurricanes in Florida, double back to back, destroying cities. And now Los Angeles is devastated at $150 billion. Will this have a dramatic change in insurance rates? As you know, the government has stepped in that pushed all of our great insurance companies out of the state by limiting the increase in insurance rates. And they say, well, if we're going to put a limit on what we can charge, we just won't provide insurance. So they pulled out. But the whole industry cannot pull out. So what's going to happen to insurance rates? How high can we expect them to go up for us that haven't been impacted by the fires directly? How will we be impacted with insurance rates moving forward?
Yeah, I mean, the carriers are trying to catch up right now. We're already seeing 25% to 50% rate increases just from COVID and the other natural disasters, other fires we had 2 years ago. So they're trying to recoup that right now.
How did COVID affect insurance?
So basically, everyone was working at home and not driving, but the government said, hey, we want to protect the individuals and not raise rates on individuals during that time.
So they put a moratorium on rate.
Yeah, but that was for like 2.5 years. People started going back to work. People started getting in accidents, driving around. And we had natural disasters as well during that time, right after that. Insurance carriers couldn't get the rate up to pay for these claims and started losing money. And then hence now we're seeing carriers leave California.
So I heard from a very smart insurance person who's since retired tell me that he believes that insurance rates will move to 4% of value. I have to assume that's replacement, not value, not actual value, because in the state of California, there's more value in land than the structure half the time. You don't need to insure your land. So is that possible that rates can move to 4% of replacement value per year?
It's possible. I think that something's going to have to happen as far as government jumping in. I don't know what. I mean, the insurance companies have to be profitable, right? The only way they could be profitable is to raise rates and pay for these claims. So that's a good question.
Do we think if any more big carriers do start to pull out of California that the insurance commissioner looks at reversing that decision ever? Or is that slated where that's going to be the law of the land moving forward where they can?
Justin, when you say reverse decision, do you mean decision of capping increases? Or
yeah, for the inability for them to raise rates beyond whatever the certain point is. And not being adept in insurance, I don't know what that amount is, but that's the whole reason, as we're just saying, right, that we're starting to see the carriers begin to leave. There has to be a point.
I'll let you answer, but before you answer, I just want to tell you all out there that on this broadcast, questions might show up on my screen, so try to put them in there. And if I'm not getting to them, I can't see them. But I see a couple people in here with a couple comments. So if you have a question out there we're not getting to, feel free to post it. Or if you're watching a recorded version, just reach out and we'll make sure you get the answers. Again, I'm Ed Kaminsky with the Kaminsky Real Estate Group. We have Keith Brewer with B2 Insurance and James White, a partner at Green and White, who represents an advocacy group to help homeowners who've been impacted on an insurance claim to make sure they get the proper insurance. And our regional director, Justin DeCesar from EXP. So repeat your question just so we have it right, Justin.
Yeah, of course. So as more insurance companies begin to pull out of California, right, which is inevitably going to happen if they can't set their own rates, is the limit that was placed on them to be able to do so, and I don't know if it's a total limit or what the cap is, not being adept at insurance, but does it look like the insurance commissioner ever reverses course and allows insurance companies to begin making those decisions internally so that we can get more carriers back? Or do you think we are just going to continue to see that being set in stone and carriers continuing to leave the state?
I mean, I think there's sort of a practical answer to that question. So what Justin's talking about is Proposition 103, which requires that any rate increases be approved by the Department of Insurance and the Insurance Commissioner right now, Ricardo Lara. I think the practical answer to that question is there probably has to be some movement on Prop 103. It's been debated for a long time. It's been in the books for a while now. And I think there's going to have to be movement because the only other option is that the insurers you have to take in more in premiums than you pay in claims. The ways to do that is raise premiums or pay less in claims, unless they decide to write extraordinarily limited policies that cover almost nothing. The only other way to do it is which there's a number of insurance rules that would make that difficult. The only way to do it is to raise rates. And if they don't, they're going to be forced from a business decision to do it. And in that case, California is going to be left with the California Fair Plan, which is an insurer of last resort. And if California has to expand the FAIR Plan, statewide or something to insure all these people where, they can't get their State Farm or Allstate or whatever market coverage is anymore, that's going to be extraordinarily costly. I mean, we were talking a minute ago about whether or not the insurance carriers might go insolvent. And my answer for most of them is probably not, with the exception of California Fair Plan will almost certainly be insolvent. That doesn't mean that claims will not get paid, because one of the ways the California Fair Plan works is when they cap out on their coverage, they can then assess or require the market carriers to pay in for claim value. And to California Fair Plan, that is pretty likely. It shouldn't have a huge impact on the insureds. But the thing to think about is as we go forward, if there isn't some change on Prop 103, if there's not some way for the carriers to bring in more premium dollars, they're going to be forced to pull out. And California is going to have to figure out a way to pay for this. And California does not want to be the insurer for its entire state.
So let's talk about California Fair Plan for a second. For those that don't know what it is, when does someone get suggested to use, obligated to use California Fair Plan? When do they come into place, and who owns California Fair Plan?
Yeah, so you're supposed to be able to try to get insurance on the open market before you go to the California Fair Plan. But if you're in a fire area or Malibu places,
So fire zone, flood zone, not earthquake zone, I assume. So flood zone and fire zone, are those the two red-lined areas that some insurance companies won't insure?
really just mostly fire zones that, and they don't want to touch that. But flood zones, you can still get insurance in flood zones.
Okay.
But yeah, but the problem with California Fair Plan is they're capped at their dwelling at $3 million. So some people are rolling the dice and just saying, I'll just take the 3 million.
So they have a $5 million rebuild home. They're only getting 3 million in coverage.
Yes. But there are other carriers out there like Scottsdale, Lexington, we call them surplus lines carriers. And they're not admitted carriers in California, but they're all A-rated, huge company. Lloyd's of London's the biggest insurer in the world. That will insure your home in these areas for a price tag, $60,000, $70,000.
Can you combine the two?
You can.
So you can get California Fair Plan up to 3 million and another 2 or 3 million from one of these carriers.
Yeah.
And you said $60,000. What does $60,000 get you?
I'll be around $7 million in replacement cost on your house
Gotcha. And 70,000 per year.
per year.
Yeah.
But even the fair plan, though, if you're maxing out your policy at $3 million on property cut, that's not a cheap plan either. Fair plan's raising their rates. So
Well, that fair plan doesn't cover personal property either, correct?
they do.
Okay.
Fair plan has line items like a homeowner policy for fire.
In some of these areas, I know that is a stretch for some of them, right? It's a big difference in the policy. At least we've had some of our agents that have reached out that have had to have their clients use it.
Most people with homes in these areas are going to max out the dwelling coverage at 3 million and not use the personal property. Yeah.
So Justin, you made me think of something that I think some of our audience are real estate brokers who are representing the clients. So how do you feel this is, I'm kind of sending this to you, Justin, but you guys may need to answer. But how do we as real estate agents and brokers need to guide our clients differently moving forward, having to experience this? We have all of our Florida agents that experience the trauma and loss that they went through, and now California, we had Hawaii not that long ago. What should we be doing to guide our clients a little bit differently moving forward?
It's a great question. I think this specifically, obviously in this talk, we're addressing a current disaster that's happening, right? And agents in that area have to be focused on immediate needs of their clients and ensuring both safety and that they have an ear to bend if necessary. But I think statewide, we are continuing to see, and this will just be a amplifying factor in that our clients' nerves around being able to get insurance and potentially what happens even if they close with insurance and then their insurance is pulled from them going forward. For agents that happen to be listening to this, the good news is that we can assure our clients that moving into a new purchase contract, insurability is a contingency of the contract in California now. And it's not just the ability to get it, but it's the ability to be okay with the cost of that coverage. So if you are moving into a property and it's just completely beyond what you find out you are going to be on the fair plan, you're not going to be able to get coverage. It's just too much money. It gives you a safety net to not be able to buy. But we need to be able to build partnerships with people that are insurance brokers in various areas, not just with direct carriers, but have access to other plans that we can refer people to so that we know that they are getting the advice they need from a qualified professional, because it continues to every escrow, it's getting harder and harder to find that coverage in the 30 days before you close.
So what do home buyers need to be focused on if they're considering buying a home? How soon should they get started? Is it during the shopping process or is it in the contract process of identifying the type of insurance that can be covered? And I do recall you saying something that was a new concern I've never heard before, where insurance companies are going to be looking at condition of property where they haven't in the past. And so touch on that a little bit, as what is changing for homeowners as it relates to insurance and the condition of the property.
Yeah, so all the carriers now are using Google Maps, taking aerial photos. If they see a little gray spot on the roof that looks decolorization, looks a little different than others, they're automatically, you get a red sign, don't move forward, that roof doesn't look good. You know, it might be good, it doesn't look good. So they're also pulling permits from the database. So when did you last redo the roof? When was the plumbing last redone? When was the electrical last redone? If these things haven't been redone in the last 30 years, then most likely you're not going to get insurance. So the new home buyer purchasing that,
Is this all insurance companies or is it certain ones?
it's all insurance companies now. So the plumbing, a lot of people,
When? Because I personally have not run into any like weird alarming things like this. You're alarming me, so I'm concerned for our transactions and our customers and sellers and buyers alike, right? Because if a buyer makes an offer, seller's happy with the offer, insurance company says, I won't insure it because the roof is shot and it's going to cost $25,000 to replace the roof. Well, the seller is going to be asked to pay for the roof, not going to want to pay for it. Buyer's not going to want to pay for it. Deal's going to blow up. I mean, there's all kinds of crazy things that can happen. I haven't honestly in practice seen it yet. So are you seeing it? And I just haven't seen it.
yeah, we are. I mean, escrows are being held up right now because insurance is hard to get. And yeah, we're getting more and more carriers are getting, especially with all these claims, they want pride of ownership of the house. They don't want these little claims popping up. So if these things haven't been updated in 20 to 30 years, it's going to be really hard to get insurance. And all the carriers are following suit. So they are pulling permits. A lot of people don't know what their electrical panels are. I mean, if you have Federal Pacific, Stablock, Challenger, or Zinsco, these are all 30-year-old. You have to get rid of those, have to be updated. And, you know, for multi-family unit apartment buildings, this could cost $30,000, $40,000 to replace those, but it has to be done.
Yeah, I can just personal experience. I had insurance recently that we closed on a personal property. I moved in. Someone came out less than a month later. I had a Zinsco panel on it, and it was, you have to get this done in 2 months or we're pulling your coverage. Can I ask, how does that, with fire hardening laws we have, especially in areas that are very high fire, are insurance carriers taking that into account at all if we've actually complied with the fire inspection prior to close of escrow with AB 39 or whatever it was, or is it just strictly the Google Maps, and if they see brush, then that's going to be the issue?
Yeah, it's pretty much Google Maps. If you're within, I don't know, right now, probably a couple of miles from any kind of outside brush areas, they're not even offering coverage. So, and coverage is going to be a lot more expensive. You're going to have to go with one of these surplus lines carriers now. Where carriers were insuring within 10 miles of brush, that I don't
Probably
think
gonna
that.
get tighter after seeing what devastation happened here.
Yeah.
So what advice would you give somebody to prepare properly right now that's not yet impacted, either one of you, to make sure they have the proper insurance coverage? What should they be looking at in their policy? What should they be talking to their insurance agent about? What are 2 or 3 of the most important things to look out for?
I think dwelling replacement is going to be the number one. Review your policy, have a conversation with your agent, ask them am I insured correctly? Actually look at your policy and try to understand it with your agent. And I would do this once a year.
So when you have once a year is great advice. When you talk about dwelling replacement, let's say we've never built a home before. We have no idea what it costs. Who do we go to for that information? Because if you ask a builder, how much does it cost to build a home? The answer is usually, how much does it cost to buy it? Are you buying 30-year-old Toyota, you're buying a brand new Rolls Royce. I mean, it really matters what you're building. So how do you get the right answer?
Yeah, I think we have to go to the local contractors. And like I said, our software is just software that we use for replacement costs. And there's usually a buffer, which you do want to look at your policy. I mean, if you could get 50% replacement, or some carriers have 200% extended replacement costs.
What does that mean?
So if you're insured for $1 million on the replacement and you have a 50% extended replacement cost endorsement, you'll be insured for 1.5 million in case construction costs go through the roof.
And is there language we can ask for in our insurance contracts that allows for it to just replace exactly what it costs at the time that you're rebuilding? In other words, it happens 12 years from now and insurance costs doubled. Is there language that we should be asking for to make sure we're well covered without having to look at our policy every year?
So back in the day, there used to be true replacement. So I think AAA might have had this back in the day, where you actually, if your house burnt down, it's replaced no matter what is listed on your policy. But carriers aren't doing that anymore. So you have to go with a carrier that has some kind of extended replacement cost on the policy.
So extended replacement cost is the language we're looking for. Do you agree?
Yeah, I completely agree. Extended replacement cost is really important. And Keith makes a good point. When you're going to shop for insurance, which he's more of an expert in here, you think it is a great idea to talk to your contractor to figure out what it actually is going to cost to put it back together. And then think about that on the other side of it, back on the claims side. You might think that your insurance carrier is going to do the same thing. That they're going to talk to a local contractor and say, okay, my client's house or my insured's house burned down. What's it cost? They're not going to do that, though. They're going to use a software like Keith was talking about to estimate the cost to rebuild the house that you had. And a lot of people think that they are going to go and do a lot of homework to figure out exactly what it costs to put it back together. The thing is, they're not really going to do that. The duty to document your loss and demonstrate the value of your loss, including the cost of construction, falls on the insured. So you need to use your contractor to try to figure out what it's really going to cost to put things back together when catastrophe like these fires really does happen. And I would bet in most cases, your adjuster is not going to just agree with the number that your contractor provides. They're going to try to fight that in a lot of different ways, which is why in the best case scenario, talk to someone like Keith in the beginning so that you have enough coverage as your base limit to rebuild your house. And then you have extended coverage, extended replacement value over and above that.
Okay. This is, now my head's moving. I have a question. You have a 1999 house. You have a fire in 2026. And I'm thinking of car insurance as related to where my question is going. If you have a 1999 car and it crashes, they give you enough money to get another 1999 car. Isn't that correct? You can't get a 2025 brand new Toyota.
Right.
So is it different on residential real estate? In other words, you lose a 99 home, but you got to build one in 2025. Is that different than car insurance?
It is.
Yeah. Okay.
It is, because the costs are higher to replace homes now and to rebuild. So you have to be in today's mind of what it will cost to rebuild, and not back then. Those numbers, even though, structure only might have cost $300 a square foot then, it's going to cost you $500 to $1,000 a square foot now, and you just have to know that. That's what you need to be insured for.
But to Ed's point, if you had let's say you bought a home in 1990, or you built your home in 1999 and you got your insurance in 1999 and you've just been letting it renew over and over and over, without calling your insurance provider, that cost to rebuild on your declaration page, what happens to it? Is it adjusted at all based on your algorithm, or does it just continue to renew at that same level forever until you call them and say, hey, I want it now at $500 a square foot?
So a lot of policies have inflation guard, where the property increases every year or so often. So yeah, if you were insured for $500,000 20 years ago, the insurance carriers automatically increasing that a certain percentage. So where you're not just stuck at $500,000 when it should have been $1 million. So yeah, your policies, and again, it's just very important, especially after these fires, for everyone to please review your policy with your current agent. And that's the most important thing I could say right now. And talk to a couple local contractors, or at least discuss with your agent, hey, I'm insured at this right now. What are you seeing out there? What are people, what's it cost? What are you seeing with your other clients? What are the costs to rebuild, and what are you hearing? And then if it's $800 a square foot, the client's got to be ready to pay that premium at $800 a square foot if they want that extra coverage, which they should have that extra coverage. You know, you need to be insured at full replacement.
Awesome. Well, we're going to close it out. James White from Green and White. One question. What's one thing, if you're in a claim, you should not say? Insurance adjuster.
In a fire claim, don't accept any sort of settlement offer right away. I mean, this happens in a lot of cases. The insurance company is going to say, okay, you have $2 million in coverage. Here, here's a check for $1 million if you'll sign here. Don't sign anything saying that you're happy with the number. Wait and figure out. Talk to your contractor. This is not replacing a 1999 Camry. Parts change. Your house is not, it's not 350,000 of your house on the road. Go figure out what it actually costs, and don't just say yes to what the adjuster says. Read your policy, reach out to a public adjuster or a lawyer, get someone to help you understand what's actually going on.
Great closing advice. I want to thank you, Keith from B2 Insurance. Thanks for jumping in here as well.
Yeah.
Justin, any word of advice to close us out?
No, just, I think, as always, find great partners that you can refer people to. If you're agents, there's plenty of things we can't say. As you know, Ed, we're licensed to do one thing, and we have clients that want that advice from us. So being able to arm yourself with the right people when they're in a dire position really can make the difference for you. So get down their contact info and use them as necessary.
Well, thank you for everybody who jumped in there. I posted our website up on the screen just now, firedonationcenter.org. We're working hard here to get donations into the office for the most needed items. We're updating the website of what those items are, because they change from week to week of what the fire victims need. I hate calling them victims, but it's just the word that comes to mind. And we appreciate any support that you can have. We also have a housing button. If you're immediately impacted, if you have a housing need, let us know. We're helping anyone that needs to lease a house, pro bono, just get you into a place. So if you have a specific need, put it on there. And if you have something that you'd like to lease out, we have a spot for that as well under housing. Thank you all for watching. Thank you guys very much for being here. I appreciate it.
Thanks for having us.
And thanks for saving some money and getting people the right protection. Thanks, everybody. That's it. Have a great day.